Hey guys, it's Paul Jing. This video is going to be on investing in REITs. We're going to go over Fundrise a little bit, as well as some other cool things that you might not have known about in regards to getting kind of more of a passive income stream with real estate. Now, this is basically fractional investment, right? You put some money together and you put it in a pool, and you have some operator basically buying usually apartments or commercial real estate or portfolios of um, of primary or rentals, and you're basically putting. It's usually going to be bigger properties, but everyone's pulling money together to buy these bigger buildings, and you're going to get a return. Most of these are kind of operating under the assumption that you're going to be a long-term partner and that you're going to want recurring revenue. So um, it's kind of set up for you to just kind of build upon it. You just keep putting more and more money into it, you get a return. It's a way to diversify just from stock investing. And the way that it's played out over here, it says here Fundrise is a real estate investment trust that for $500 you can go to a platform and basically be a part of a pool of money, right? So here's Fundrise. Here's our website. This is the client returns. This is apparently the real time returns, and it's kind of saying standard deviation within a 7 year period, you should get most of your money back. That's kind of how they're kind of presenting it. At least that's the way that it looks like to me. It's saying here the average income return is 5.42. But then you have here your quarters where you have a 0.09, whereas the public stocks you can go to a negative 19%. Like you can lose money, right? So they're saying public REITs, public stocks, markets go up and down. If you go invest when it goes down, you can lose a chunk of money. If you kind of go on the uphill, well, yeah, of course, stocks can give you a higher return. They're saying it's going to be a lower return, but overall, because you're minimizing your downside, it's basically saying like, hey, you'll come out better than with stocks. Interestingly, for a lot of people that do index funds or anything of that sort, they'll kind of push for this idea is like closer to 4 to 5%. But you know, it's highly dependent on what portfolio you invest in. So this is a Fundrise. The minimum investment is $500. I do want it to present something that isn't in this article, but it's something that I found out when I was looking at 1031 exchanges. For those that aren't familiar, a 1031 exchange in real estate is basically if you have a house or some kind of investment vehicle, like it could even be land or an apartment, anything of that sort, and you have it as an investment, and you don't want to pay capital gains whenever you sell it. You have to pay taxes for it. You can actually defer that paying those taxes to a later point, and it's called a 1031 exchange. Now, the problem with a 1031 exchange is that you have to match up the debt that you're going to collect with. You have to match it with the debt that you're going to. Basically, if you owe $100,000 on a property, you need to put that to a property that you're going to buy with $100,000 in debt. And so it's letting you switch investments, but getting that criteria is pretty difficult. And the idea here is there's something called a DST 1031. It's crowdfunding. It's very similar to Fundrise. And the idea is if you are an accredited investor, 1 million net worth, excluding primary residence of 200,000 of income individually. There's ways to kind of get around it if you have an accountant of some sort. But if you have a bigger deal, and you could basically put that money into a DST, I think the return rates are a bit better, and you could get more cash flow. Right, that's basically it. So there's different operators that have a DST exchange of this sort, but there's options even for those that are non-accredited. So these are alternatives just from something more institutionalized like Fundrise that you could find to get better returns. And so you just have to be aware of who is the operator in these situations. the investment's going to be highly dependent on who's operating this fund. Are they buying good apartments? Are they buying all these things? Generally, for the most part, they'll be good, but you'll want to vet that out. So these are some passive income streams. This is my criteria for it. I have 9 criteria for REITs. If you could see, it is a higher percentage than land investing, significantly higher than 9 to 5, basically because of its risk of money and speed to get money. Once you put the fund, it's going to start working for you. You don't have to do anything, so it's really easy. This should be closer to a 10. Is it scalable? I put here an 8, and only that because you're going to have to derive funds from somewhere else. So in terms of scalability, yes, it's scalable. You just keep putting more money into it, but you're going to have to find that source from somewhere else. Is it competitive? I would say it's not that competitive. There's always deals around and people that could use funds. So as long as you realize there's Fundrise, there's options like DSTs, right? You can find ways to profit. And this is a 10 in terms of location specific. You're going to do really well. The opportunity for money potential, I put here a little bit less than a 9 to 5 job because this is not something, where you're going to make an extremely amount of money, unless you're going to be doing this for the long haul. In this case, this would be closer to a 2, and you're talking about closer to a 9. Not a 9, maybe closer to 7, 8 would be my guess, right? Something a little bit less. It's highly dependent on how much money you put into it. So it's a purely passive income stream where you just put money in, you set it, forget it, and you let go. So in that scenario, it's really good. It's not really a side hustle. It's not really a business. It's more of a pure passive income stream that you put it in, you set it, forget it. And if you are interested in kind of paper assets, REITs, stocks, mutual funds, index funds, even peer-to-peer lending notes, all that is kind of interrelated. Land investing has notes in it where you basically function like the bank, and you could basically originate those loans and get passive income that way. But this is a lot more active than, if we're going to scale it, 9 to 5 job, it's taking up a lot of your time. Your time investment is going to be more compared to REITs. This would be closer to an 8, 7, because an REIT, you put the money in, you set it, forget it. So these are some of my thoughts with REITs. I think it could take a portion of your passive income strategy, but it can't be your predominant one. So there's that. So I'd put here, the way I would flip this is I would put here potential money for speed to get money. I'd put it to 7. That's the way I'd operate, because unless you're purely thinking, hey, I'm not going to touch this for 40 years, you're going to put some in, and I assume you'd at certain points pull that money out and find other places that you can invest. So that's the way I'm kind of thinking about these REITs. But you would adjust those numbers. This data, I have a spreadsheet with all the different businesses, income streams, and passive incomes, and the different ideas and strategies from Shopify. And I'm adding a couple other ones out there. And it's basically going to give you a score, and you kind of figure out, if you're kind of in this process of figuring out your side hustles or passive income streams, what's out there. It'll give you a baseline thought on what might be good for you. So if you're interested in that, check that out in the description below. Our land investing course, I highly recommend it. It's a really good way to diversify your income streams. We basically buy, sell land for cheap, and then we buy land for cheap and then resell it for profit, usually for cash or for owner financing. That's going to be in the description below. We have a course if you're interested in that. Otherwise, subscribe, like this video. I really appreciate it. Take care. Have a good one.